Good morning. It's Tuesday, the 24th of February, 2026. Let's get right into the key intelligence shaping the day. So here's our operational roadmap. We are leading with the growing uncertainty around the U.S.-India trade negotiations. From there, we'll hit some major macro and governance updates, including a brand new anti-terror policy. Then, it's a rapid scan of corporate intelligence, a look at what the opinion pages are debating, and we'll close it out with the final market numbers. Let's begin. All right, let's jump right into our lead story. The push to get a trade deal done between India and the U.S. has hit a pretty significant wall, and it's casting a whole new shadow of uncertainty over the economic relationship between the two countries.
Okay, so what's going on here? It's really a double whammy. On one hand, the actual talks for an interim deal are on hold, thanks to some developments in Washington. At the exact same time, you have the U.S. Supreme Court striking down President Trump's reciprocal tariffs. Now, that's a huge deal. It basically forces a complete legal reset, because any new tariffs are going to need a much stronger foundation than just an executive order.
And you can see how the market is reacting to all this uncertainty. Almost immediately, there was a big move into those classic safe haven assets. I mean, just look at silver prices in Delhi. They shot up by 8,000 rupees a kilo. And it wasn't just silver. Gold did the exact same thing. It climbed 3,300 rupees for every 10 grams. This isn't just a small flutter. It tells you that traders and institutional investors are viewing this trade situation as a major risk event.
Now, the strategic picture gets even more interesting when you look at energy. Check this out. In just a single month, Russia's slice of India's oil imports took a nosedive, dropping from 34% all the way down to under a quarter. And guess what? In that same window, imports of U.S. oil actually rose by 31%. Even though it was more expensive. It just goes to show you the complex economic chess game that's being played behind the scenes.
Okay, let's pull back and look at the bigger picture in macro and governance. We've got 3 key updates to run through here.
First up, the Union Home Ministry has just unveiled Prahar. This is a big deal. It's being framed as India's first ever truly comprehensive anti-terror policy, and it's built from the ground up to deal with the kinds of tech-driven threats we're seeing today.
And what's really notable is what they're now considering a threat. We're talking cyber attacks, drones, encrypted messaging platforms, the dark web, even crypto wallets. The policy also specifically calls out protecting critical sectors. Think power grids, railways, aviation, and defense. Next, let's talk airfare. We've all seen those wild swings in ticket prices, right? Well, someone filed a public interest litigation about it, and it's gotten the Supreme Court's attention. They've called the issue serious and have basically put the government on the clock. They've got 4 weeks to figure out some new guidelines. The next hearing is set for March 23rd.
In our last macro update is a bit technical, but it's really important. The Commerce Ministry is rebooting how it measures trade. They're moving the base year for their data from 2013 up to 2023. Why does that matter? Well, it ensures our economic data actually reflects what India is buying and selling now, not what it was a decade ago.
All right, shifting gears to the corporate world. We've got a quick scan for you, covering everything from infrastructure and finance to some big moves in tech.
The headline number you need to know is 16.72 trillion rupees. That's the target for the government's second phase of its public asset monetization plan, running from 2026 to 2030. This comes after the first phase, which, by the way, hit nearly 90% of its own 6 trillion rupee goal. Okay, let's do a quick flyby of the sectors. In shipbuilding, Cochin Shipyard is deep in talks for a $500 million joint venture with a South Korean heavyweight. Over in aviation, the regulator, the DGCA, is floating an idea to fund itself by taking a slice of passenger fees. And for you market watchers, Clean Max Enviro Energy is hitting the street with a 3,100 crore rupee IPO. Now, over to venture capital. Peak XV Partners just closed a massive $1.3 billion fund. You add that to what they already had, and their total dry powder, that's cash ready to be invested, is now north of $1.6 billion. That is a serious war chest. And you can see why they were able to raise that kind of money. Just look at their track record. They've had 35 companies from their portfolio go public, with 10 of those happening in just the last couple of years. They've also been incredibly active in AI, making over 80 investments in the space, backing some huge names like Misho and Sarvam AI. All this talk of new tech brings us to a really interesting question for the consumer world. Are we finally about to see AI-powered smart glasses go mainstream? Well, Reliance Jio is betting big that the answer is yes. Word is they're just 2 or 3 months away from launching their Geo frames. And the strategy here is classic Geo, right? They're going to aim for mass adoption by hitting the market with aggressive pricing and just overwhelming scale.
And just a few final points to round out our corporate intelligence scan. In private equity, Hill House has bought a minority stake in the engineering firm Quest Global. On the enforcement front, the IBBI has flagged over 4 trillion rupees in questionable transactions for the authorities to look into. And finally, on the infrastructure side, the RBI is bolstering its resilience with a second high-security data center in Odisha.
Okay, let's switch from reporting the facts to analyzing what they mean. We've pulled 2 really distinct arguments from the opinion pages, both digging into the state of India's digital economy.
So, on one side of the debate, you have Lloyd Mathias looking at the Open Network for Digital Commerce, or ONDC. He's arguing that for all the hype, it's still a pretty niche product. He points to a clunky user experience and says it's just not clear what the value is for sellers. Then, on the other side, you've got Ajit Ranai. He's making the case that India isn't really going cashless. Instead, he says, we're in this hybrid equilibrium, where digital payments and good old-fashioned cash are both growing together.
This chart really puts that ONDC argument into perspective. We're looking at a $100 billion online retail market here, and ONDC's share, it's less than 0.1%. This is the key data point behind Mathias's argument that the platform just hasn't broken through yet.
And this quote from Ranade perfectly sums up his argument. He's saying, look, everyone sees the UPI numbers hitting new records, and that's true. But at the same time, the amount of physical cash out there is also growing. He says this coexistence, this hybrid model, is the new normal for India's economy.
And finally, let's close out with the verified market numbers. The Sensex ended the day up about 480 points at 83,294. The Nifty also gained, closing up 141 points. In foreign exchange, the rupee slipped just a bit against the dollar. Oil ticked up slightly, and as we talked about earlier, it was a big day for Golden Delhi, closing up 3,300 rupees. And that is the full briefing for today. Thank you for joining us.